Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day, and kicking into the end of August. How is that? That is crazy. Don't make assumptions. Let your life be transformed. When you stop making assumptions, your word becomes impeccable, and your life is completely transformed. Magic just happens in your life. What you need comes to you easily because the Spirit moves freely through you. Market-wise, let's take a look at it out here. We had the Dow Industrials down 87, NASDAQ off 19, S&P's down 10. Gold contract up $4.50, trading at $12.9550. You had silver up 9 cents, $17.15 an ounce. Platinum, $9.78 an ounce. Copper's the number out here. It was flat today, folks. $3 a pound, though. That baby looks like it wants to run to the 308, 323 number. Light sweet crude, flat, $47.64. Now, what's going to be intriguing about the oil market is this, folks, is that you got Harvey, which is a tropical depression right now. That's in the Gulf of Mexico. Right now, live, it's 470 miles off Port Mansfield, Texas. It's moving at 9 miles an hour. And what does that mean? Well, bottom line is that they just issued a hurricane watch, and they're thinking that that very well could turn into that. Now, what's going to get intriguing about that, right now, the way this is set up, a tropical depression is the weakest in a class of systems of tropical storms and hurricanes. What they are looking for, however, though, they think we can get a potential surge of 4 to 6 feet, down at the Houston area. They are going to get some rain, I'll tell you that. They're going to get 16.5 inches of rain. And what you have there, the Exxon had already started shutting down a couple of the bigger rigs there. What you do have there, and this is where you can see the oil market in general. So let's just look at that oil market for a second, because what you do have, you have 30 refineries that make up 7 million barrels a day of refining capacity. So you're talking about a big number here. And if we do look, you'll see it right in the futures market. What you have is this. You have the heating oil. That was up 2.1%. Gasoline was up 1.9. Crude itself was up 1.1. So bottom line, we'll see where that baby does shake out. That's your oil market. Bonds, notes and bonds, folks, they want higher price, lower yield. The 10-year note right now trading out at 2.168. And when you do take a look at that, that is going to be very close to the lows of the year. Lows of the last 6 months. You had the low is 2.126. The high is 2.38. If we do that for the year, the low is still pretty much lower, 1.534. That was the low of the 10-year. The high right now of the year is 2.6. But you can see we're about in the last 6 months. This is almost at the lows of the last 6 months. 30-year also wants topside. 30 years also right next to its June swing high. King dollar. What do you have with King dollar? King dollar right now is at 93.08. And I suspect what you're going to see with King dollar is that, number one, it looks like it wants to test the 92.830 again. We'll see whether it's going to go right against where it came off the bottom. It came off that bottom at 92.58. Now, I'm going to put the continuous contract up here because this is going to get real tricky coming on Friday. They're claiming on Friday, folks, Jackson Hole, they're claiming there's going to be no big speeches. Well, there's going to be speeches, but there's going to be nothing new that comes out of it. Well, guess what? You have 40 central bankers getting together. There's going to be something coming out of it, okay? And if we put up this King dollar, what you're going to see is this. So what's sticking out like a sore thumb are the highs from 08, which is 89,250. The highs from 2010 is 88,800, okay? So the way this is set up, it can get there in a heartbeat. Now, let me show you something, because we've been in this consolidation since February of 2015. Well, the bottom of the consolidation, that's right where we are right now. Let's call it 92. The top of the consolidation is 103. Well, when you look at something like this, you say, okay, when you break a consolidation, you just take the top of the consolidation, you take the bottom of the consolidation and say, okay, you take that point and you can say that's where we go. When we do that, what you're going to see is that you can go to 81 in King Dollar. Now, the top of what we just did was 88. You go to 81 in King Dollar, let me tell you something, man. Now, let me go over to the gold contract. You're going to see the correlation here is pretty intense. We take a look at gold. I have the continuous contract up. And what you're going to see is that, this has also been in a consolidation for a long period of time, October of 2016. You start looking at this and said, you know what? If in fact we do that, you're going to see a launch in this market that's going to be pretty intense. And it would make sense because the consolidation in gold has been almost for 3 years. No, 4 years. I'm talking 4 years. We were at the same place in June of 2013. So the correlation, of course, is direct. It's the same with the dollar. But we'll see where this whole thing shakes out. Your first leg up is 1377. You break 1377, and there's not much in the way to 1545. That's how that's set up. And that's because we went down so fast after coming off that high. We came off the high. You went from 1602 to 1323, and you did that in April of 2013. Now, because when you go down so fast without a step steer down, when you do build enough cause, which looks like we have, once you get into that bar, and the beginning of that bar is 1323, you can go to the top of that bar very quickly. Now, what we also have is this. The confirmed ABC structure up on gold is 1327. So, another scenario would be make the 1327, you go sideways for a bit, then you make the run. I think we're going to know pretty quickly, though, because the way that the central banks are lined up fundamentally, the way that the market is lined up technically, and the time of year that we have, it's all kind of playing out in a big way. You stay right there, folks. We'll be coming back with more numbers. And in fact, go over to our website at TFNN. We got a great announcement out here today. We just launched a workshop. This workshop is sponsored by Nadex. This is a free workshop, folks. It's going to be a live workshop. We're coming to Boston September 30th. As soon as we come back, I'll go right through it for you. We'll be right back, folks.